Hey, welcome to the Stock Scores Market Minutes for January 23rd, 2017. I'm Tyler Ballhorn. This week we're going to talk about understanding your stock's supply. I'll then do my regular weekly market analysis, review the trade of the week on SGY to finish things up. All right, so what does it mean when I say understand your stock's supply? Stocks that rally up into resistance will typically stall at those areas of resistance because sellers tend to act there. Now, resistance occurs at past price peaks. So if you have a market that was up here and then it comes down, when it gets back up to that price peak, it's going to get stuck again. The market remembers those old high levels. The more volume that traded at that old price peak, the longer it traded in that zone, the more substantial the resistance will be. Also, the more recent the resistance, if that happened, just a month ago as opposed to a year ago, the more likely the stock will stall at that level. People that bought up here a month ago, or a year ago rather, are less likely to still hold it than the people that bought at that level a month ago. The more recent the resistance, the stronger it is. The more volume that traded at a price level, the more supply will come at that level. Volume is needed to break through resistance. In order to get through this, we need strong volume to get through those price levels. Let me show you an example. This was IBM on Friday, and it was very strong on the open, trading better volume than normal. This is a very short-term 2-day, 2-minute chart. And at this point, the buyers were pretty excited. It was actually quite predictable that the stock would have a hard time getting through the $170 level. You can see there for about 4 minutes it was above 170, and then toward the end of the day it made a couple tries again for maybe 10 minutes here and 2 minutes right at the end of the day. But for the most part, it kept getting stuck at the $170 level. And it becomes apparent why when you look at the longer term chart, the 30-day, 60-minute chart, and you can see that repeatedly in the past, it was getting stuck at 170. The market remembers that. So when you have a stock that is rallying with good strength, take a look at the longer term time frame to see where is it going to find resistance at those old price peaks. All right, let's get into this week's analysis. And speaking of old price peaks, look at the S&P. It just keeps bumping up against this ceiling that it's hit so many times. And on Friday, we had the market gap up into resistance, and it got stuck there and fell lower through the day. We do, however, have rising bottoms going into that pattern, and that means there is optimism building, and optimism usually culminates with a breakout through resistance. We don't have it yet, but that is the probable outcome. So this chart right now is negative, but it is, or not negative, neutral, but it is building optimism. We just need the breakout through resistance to tell us that the buyers are back in control. Speaking of buyers in control, looking at the longer term weekly chart, you can see those rising bottoms. That is optimism. You can see the upward trend is intact. And right now we're just in this very low volatility trading range right here. And if we can get that break, we should continue the upward trend in this channel and get back up toward the top of the channel up there around 235 on the S&P ETF SPY. Now the small cap stocks, and I'm showing a shorter term daily chart here, they kind of drifted lower last week after being in a trading range for a while, and it looks to me like we may see a little bit more of a pullback in the short term. The tops are falling slightly, not critically so, but we have a slight bit of pessimism building in the small caps. Now this thing ran up quickly, and it's probably just working its way back to its longer term upward trend line. Canadian market, good day on Friday. Rising bottoms, we're in that upward sloping channel. We're not at the top of the channel. We have more upside till we get to the resistance at the top of the channel. So I would say this remains a buyer's market. It's getting a little extended. It's been going up for a while, but I see no reason for this to not continue as long as the upward sloping channel, the bottom envelope, doesn't get broken. Longer term chart, we see a little bit of a concern here because the trend is starting to go a little bit parabolic. Again, not critically so. We broke through that resistance. We're heading higher, and the market has momentum. It looks like it will continue to go up in the near term. TSX Venture, sorry, I got the wrong chart in here, but the TSX Venture has been pretty quiet the last little while, but trying to reverse its longer term downward trend. Now on US Treasuries, We had a little bit of weakness last week. I wouldn't say critically so, but it basically is getting close to that downward trend line. I think it'll bounce back and move up in towards here. But if it rolls over and moves through this support, then we have to think the bond market is headed even lower, and that means interest rates moving up. For now, my thought is we're probably more likely to work our way back to that downward trend line. So short term should see some upside, but this is still a bearish chart longer term. On the US dollar side, we kind of rolling over, not to be too critical of it. The market had a big run to the upside on the US dollar. Now it's making a flag to the downside. Most likely resolves with an upside move in the next few weeks. Gold has been bouncing back with that weakness in the US dollar. It's almost up to the downward trend line, maybe one more good strong week and then it hits that. We did close below our open last week, and that points to maybe rolling over even before we get to the downward trend line. But although it feels like the gold market is strong over the last 4 weeks, and it has been, I don't think big picture wise it has broken the back of the bears. And I think the market is still bearish on gold. It just got real oversold here with that sharp sell-off, and now it's bouncing back from oversold, but it has not yet broken the bearishness. Oil market, very low volatility. You can see the very narrow trading range it's been in, right under resistance. We've talked about that a few times. Every time it gets up to 12 on the USO, which is about $53, $55 on oil, it gets stuck. And in order for this to become a bull market, we need a breakout through that. We do have rising bottoms on this pattern, so there is optimism slowly building, but it's a question of time. When is it going to make that breakout? It could be next week. It could be 6 months from now. We got to wait for the break. Fear, not a factor, moving to new lows. This again, a very short-term 30-day, 120-minute chart. But you can see it has these brief little rallies here and there, but for the most part, the trend is down, showing complacency among investors. U.S. stocks, bullish longer term, neutral short term, needs to break out of that trading range. Canadian stocks, bullish on both time frames. Gold, bearish long term. I've lowered my rating to neutral in the short term because I do see it coming into resistance, and it did close below the open this week. Oil, neutral on both time frames. U.S. stocks appear ready to break out of their sideways trading range soon. Up is the most likely break, but watch for a move out of the pennant that's on the daily chart to tell you where U.S. stocks are going. Canadian markets have good upward momentum and should continue, but becoming a little bit of a chase up here. Gold is strong in the short term, but it is coming into resistance. Longer term, it's negative. Oil, very quiet, and there's really no fear in the market. All right, trade of the week. I picked up SGY very early in the morning on Friday because it was moving up. You can see my pink dots here. Those pink dots show me that there's abnormal activity in the stock in both price and volume. I've got some algorithms written to find that. We actually had a second entry right in here with a break from a good pattern with what I call a message candle. Those are the white dots. So I added to my position there, and I felt like it was going to probably get stuck at $10. There was some resistance on the longer term time frame on the daily chart at the top of the gap. And also, $10 is a psychological barrier that is difficult to break through. So I sold it just under $10, just off the highs, got an excellent exit on the stock as it moved down into the close. So it's been that kind of a market. On these hot stocks, you have to take more of a what I call a Steve Miller approach. You might remember his song, "Go on, take the money and run." Well, that seems to work these days in the month of January because stocks not seeing as strong a follow through throughout the day. All right, well, that has been the Stock Scores Market Minutes. I hope you've enjoyed it. Have a great week in the market. Subscribe to the channel. Like the video if you like it. Tell your friends. We'll see you next week. Trade well.